Alright, let's take a look at this BTC chart. Figuring out where these potential supply and demand zones are can take a lot of screen time, and it's something you really have to learn to see. Now a tool can help speed things up by highlighting these areas for you. See, the supply zone is identified up top. The zone itself is interesting, but the real key is what happens when the price comes back to it. Right here, price comes back up and retests the zone. When that happens, you get what's called a retest signal. And you can see the same thing happening on the flip side. Down here, a demand zone is identified. Price comes down to retest it, and you get another signal. So what's actually drawing these zones on the chart? This is an indicator called Forex charts, MTF, supply and demand. I'll show you how to get it in a bit, but first, and this is way more important, let's walk through how to actually use it and think with it. First, I'm gonna jump into the settings and make a couple of some changes to fit the specific strategy we're talking about today. I'm changing the sensitivity to low. And the minimum zone size to 14. For me, this just helps filter out some of the smaller, less significant areas and focus on the bigger picture. Now here's the most important change for the strategy. We're trying to trade in the same direction as the main market trend. So to do that, I'm gonna go in and disable the retest signals and enable the breaks option instead. So what does that actually change? Now we're focused on breakouts. Take a look at this Bitcoin chart. The tool identifies a supply zone, and in our last strategy, we might have waited for a retest. But with this setup, we're waiting for the opposite. We're waiting for a candle to actually close above the supply zone, just like this one here. For this trend following approach, that's the kind of signal we're looking for. And on the flip side, here's a demand zone. We're not looking for a bounce. We're waiting for a bearish breakout, which just means the candle closes below the demand zone. That would be the sell signal for this particular strategy. Now, here's the thing. Any signal on its own can be a fake out, right? You can get chopped up if the market's just moving sideways. So I always add another layer for confirmation to help filter out that noise. For this, I like to use a MACD plus 200 SMA indicator. Just search for that and add it to your chart. I'm gonna make a few quick adjustments to clean it up. In the style settings, I'm just disabling a few of the extra plots and labels so it's easier to read. I like to change the colors to something really simple. Green for up and red for down. And in the inputs, I'm changing the MACD slow moving average to 100 and keeping the other at 200. Okay, so here's the most important note for this whole video: knowing when not to trade. How do you spot that? Whenever you see these moving average lines are all tangled together, moving flat or crisscrossing back and forth rapidly, that's a sign of choppy sideways market. For this strategy, let's stay out. We're only interested when the market is clearly trending. So when do we trade? We're looking for a clear trend. That means the 100 moving average is below the 200, they're both red, and the price is below them, that's a clear downtrend. Or the 100 is above the 200, they're both green, and the price is above them, that's a clear uptrend. Let's look at an example. Here the lines are different colors and they're choppy. We don't touch this. But then look what happens. They both turn green, they get a nice upper slope with the 100 above the 200, that's our uptrend. So when the supply zone breaks to the upside, that's the kind of confluence I'm looking for, even consider a buy position. As far as managing a potential trade, one way to think about is setting the stop loss just below the recent swing or the moving averages. For a target, aiming for a 1.5 or 2 to 1 risk to reward ratio as a common framework. And here's another example, same idea. We have a clear downtrend, the 100 is below the 200, both are red, a demand zone forms. As soon as the candle closes below that zone, that's the breakout signal in the direction of the trend. The same principles for managing the trade would apply here. Alright, so if you wanted to try out the supply and demand indicator for yourself and test these settings, I've put a link for it down in the description and in the pinned comment.